And welcome to this webinar on Jobkeeper version 2. Thanks for coming along. Firstly, I'd like to take this opportunity to say hopefully everyone well and getting through the situation that we certainly find ourselves in. As a small business owner and dealing with many clients out there every day, as our whole team is, thanks for supporting us, and it's important that we continually support each other. We're here to assist as tax professionals. We are learning every day from all the different government announcements, both federally and state, and we are certainly trying our best to relay a lot of this information to you guys through emails, through newsletters, conversations that we have with each of you, social media, text, and the list can continue. We certainly do find ourselves in this crazy position, and what the future brings, no one knows. We'll do our best today to explain Jobkeeper version 2 and obviously give you the information that you need to ensure that everything moves forward. So the team here at Chan and Naylor are most welcome to assist where we can, and we'll certainly do our best. And let's get stuck into it. Oops. Oh, my computers. Sorry, just having a bit of a computer glitch here at the moment. Trying to go on to the next screen for you all. Bear with me one moment, please. All right, that's better. So basically, our offices here at Chan and Naylor are located at Moonee Ponds, Wheelers Hill and Melbourne. Obviously, with the stage 4 lockdown, we're closed at the moment. We're all working from home, no face-to-face meetings. And as soon as that changes and the Premier lets us know, we'll certainly keep you guys updated as best we can. We, like any other business out there, have certainly changed, utilising technology to the best of our ability. Things like Zoom and Microsoft Teams, we're looking at DocuSign, we've got brand new secure client portals and webinars happening as well. And like I said, we'll certainly keep you updated as soon as we know more from the powers to be. All right, discussion points. Let's get stuck into it. Firstly, it's fantastic to have over 100 people register for this webinar and on the webinar today. And hopefully I'll go a long way towards answering many of your questions. Feel free, there should be a comments tab on the webinar, and if you've got any questions, list them down, and I'll certainly do my best at the end of the presentation, barring time, to answer any of those questions. So today we're going to be looking at, before we get into Jobkeeper version 2, it's very important just to have a quick chat about version 1 and what's changed versus what hasn't changed. We'll be looking at obviously the extending of the period and how the new Jobkeeper amounts are going to work, what the new turnover test requirements are. We'll be looking at the new dates that this will cover. We'll also have a quick look at some tips around cash flow and how to keep banks honest during these times. And then we'll finish off with what's required next, or what do we need to do next. Let's get stuck into it. So like I said, before we get stuck into Jobkeeper version 2, it's important to revisit some of the rules with Jobkeeper 1. A lot of it hasn't changed, but then there are some big factors that certainly have changed. Jobkeeper 1 commenced back in March 2020 when the COVID situation obviously took the state and the country and the world by storm. And at that point, the federal government suggested that it would, or estimated that it would cost them about $130 billion for this whole JobKeeper program. It was designed to last 6 months, and JobKeeper version 1 actually finished on Sunday, being the 27th of September. Because they did it so quickly and had to do what they had to do, it was basically a flat $1,500 per fortnight per employee, regardless of whether an employee was working casually on a Saturday, for argument's sake, for 3 or 4 hours, or whether they were doing 40 or 50 hours a week. There was no discrimination or no breakdown between the two of them. It actually meant at that point, and for the last 6 months, some people have actually been better off than what they were originally with the cash flow payment that they were receiving. There was the main eligibility rule was around a 30% reduction in projected revenue. And what do we mean by that, or what happened back then? It was based on a monthly basis. So many of you out there, we looked at possibly March or April, even some as late as June and July with the second lockdown here in Victoria. And if your monthly revenue was projected to be lower than 30% compared to the previous period or the previous comparison period, then you basically met the eligibility criteria. That was referred to as the basic test. There were also other alternative tests out there for those that basically weren't in business, for example, for 12 months, or we couldn't easily compare period to period. In continuing, once you were in, you were in. The only requirement, which we've been doing a lot of this for our clients, was preparing a monthly declaration which had to be continually lodged for you to receive your payment from the ATO. And generally that has to or had to be done within 14 days of month end. There were a few teething issues at the beginning, but generally as time went on, payments were received about 4 to 5 days after that monthly declaration was lodged. The objective of JobKeeper was all about to support businesses and also to keep employees off the Centrelink queue and to get businesses to continue to support and pay their employees. Like I said, it was very quickly put together. Generally, the feedback that we've received is that it has worked. A lot of people would obviously prefer to be operating normally, and we'd all prefer not to be locked up in our homes, if you like. But quickly it was put in place, and generally it allowed businesses to pay bills, to keep employees, that relationship going, and obviously help families with things like bills and mortgages and school fees. The interesting part that's now going to happen for those employees that are no longer going to receive it, that's going to be the interesting period coming up for so many reasons. Just a quick little bit of trivia. Some of the postcodes out there that are during the months of April and May that were the biggest applications for JobKeeper. Melbourne City, so the postcode of 3000. Probably no surprise considering all the small businesses and cafes and restaurants and all those little businesses in the city that go a long way towards supporting the office workers. Obviously, at the moment, the city is in a bit of trouble and it's pretty much shut down. And it'll be interesting to see, and many of the experts are basically saying, will it ever recover and how will it be in the future? Some of the other postcodes affected greatly. You've got there Caroline Springs and Deer Park, down to Hoppers Crossing and Point Cook and Werribee, up to Donnybrook and Calcao. Even just for curiosity, we've got where one of the offices at Wheelers Hill is situated was up quite high, along with Moonee Pond's office there as well. Many of these postcodes actually form a lot of the hotspots that we've come to know just more recently as well. All right, let's look at what hasn't changed with Jobkeeper 2 that's now coming into place. If you are already enrolled in Jobkeeper 1, we will not have to re-enroll you with the tax office again. There will still be declarations required. So again, many of you, or you should have, I know we did it for all our clients, at the beginning, whether you're an employee or whether you're a business participant, you were required to complete a declaration on an ATO approved form. They will not need to be redone again as long as they've already been done through Jobkeeper 1. Payments will continue in arrears. So for example, and we'll cover this with a table later on, but basically they're 1 month behind, if you like. And there is no change in the threshold. Basically a 30% reduction. Now that must be COVID related. Okay, so if your business has dropped its turnover, which we'll go through a proper definition later, by more than 30% because of COVID related, not for some other reason, then ultimately that will basically make you, you will maintain eligibility. But it's very important because the definitions around turnover have changed. So we need to have a look at that. We're hoping as tax agents, and we've been advised, that the ATO is doing everything in their power to make the re-enrollment process very easy. Not sure if the ATO and easy are in the same dictionary, time will tell. And as of this morning, I noticed there were computer troubles. So generally what's going to happen for all of you already in Jobkeeper version 1, we are in the process right now on the 1st of October preparing, and we're going to lodge within the next 14 days, all of your monthly declarations. Once we do that, the ATO should be providing us with paperwork to say, these are your terms and conditions. Do you meet eligibility again? And what's going to happen with all the employees? As of this morning, and from what I've seen, that's already fallen over a little bit, but hopefully the ATO will sort it all out in the coming days. Monthly declarations will still need to be lodged with the ATO. So there's no way of getting around that. It's pretty simple. If we don't lodge them, no money comes your way as an entity or a business. Any Jobkeeper receipts that you receive on behalf of your team members, you must pay that fully to your employees. There will still be a basic test involved, and there's still alternate tests, which we'll cover later on. And just for your own curiosity, because I know we're getting stuck into a lot of tax returns on behalf of you all, there is no GST on any Jobkeeper receipts. It will be income though, for income tax purposes, as we complete your financials and your tax returns, as we're doing for many of you right now. Okay, what are the big changes, or what are going to be the changes with Jobkeeper 2 versus 1? It's mainly around the eligibility. So with Jobkeeper 1, many of you, we were able to project what your turnover was going to be. And providing that projected turnover, generally on a monthly basis, was 30% or lower, then you were eligible for Jobkeeper. It is now been turned on its head, where it's going to be solely based on actual turnover, not projected. And I'll go through shortly what that looks and feels like and how we calculate actual turnover. It's going to be a two-tier approach to payments. So generally we're splitting up full-time and part-time employees, and they will receive different amounts based upon their what box they fall into. Time period, so we're looking at Jobkeeper being around, if you're eligible, still for another 6 months. but it's going to be broken down into 2 3-month periods. So we'll obviously have October, November and December, and we will need to qualify or be eligible right now in the coming weeks and month. Then you will need to re-qualify come January for the January, February, March period. Just because you qualify for one does not mean that you qualify for the other. They will need to both be looked at separately for eligibility purposes. And again, I'm going to go through that in a moment, but it's certainly something different than the previous JobKeeper, where once you were in for that 6-month period. Okay, before we get stuck into JobKeeper 2, I just wanted to mention, please be careful. The ATO and the government have spent a lot of money, and they are investigating and they are prosecuting. Okay, so the government is now looking at everything a lot more closely. There have been over 15,000 plus wrongful claims by businesses where the ATO have come in and either denied or audited or asked for money back. So be very, very careful with what we're doing. As a business, and I know some of you have been caught up in it, we have made sure that our work papers, and especially when it comes to eligibility purposes, we have made sure we've documented that properly, just in case. So all I wanted to mention, be very, very careful. They are watching. You know, there's many rumours that we've heard that around businesses holding off invoicing, playing with their books, not passing the correct amount of monies onto their employees. The ATO is trained to investigate and do their job, just like we're trained to do ours. So just be careful is all we're saying. All right, let's have a real good look at JobKeeper 2. So it was announced by the federal government back on the 21st of July, a few months ago now. Because of the Victorian lockdown, there were further amendments to their original announcement, which were made on the 7th of August. And that's simply because of Victoria compared to the rest of the country being in lockdown. They couldn't do the rules that they originally planned. It's been extended, like I said, until the 28th of March next year for a further 6 months. Extension period. So like I said, it's going to be broken down into 2 periods. Extension period 1 commenced on Monday, the 28th of September, and will go through until the 3rd of January. So if you're eligible, there'll be 3 months or 7 fortnights worth of payments coming your way on behalf of your employees. The second extension period will basically run therefore from the 4th of January through to the 28th of March next year. And again, that'll be for another 3 months or 6 fortnights. We will need to qualify eligibility separately for each extension period. Turnover test. So this is the big one. Not too much has changed here. So the main one that's going to affect most of you out there is where you have turnover of less than $1 billion. If you have a 30% or more reduction in your turnover, then you will be eligible for JobKeeper version 2. It must be a COVID-related decrease. Okay, that's the key, not some other reason. Again, there's a couple of other industries listed there where the percentages differ slightly. I won't go into those too much because there's not too many of you out there that affects. You know, a lot of software out these days, so many of you are on Xero software. There's now reports that Xero have created behind the scenes, which we're accessing, which gives us an idea of how much your turnover is from year to year, which employees are eligible if you're using the payroll section. So it's fantastic that we can use that to our advantage. An employee, if they were working with you from the 1st of July or earlier, they will now be eligible. That rule got changed about a month or so ago. It was previously the 1st of March, so the government have brought that in. Part-time employees have different rules that we need to look at. And I won't cover that right now, but if each of you that relates to you or your business, for example, a cafe that may have some part-time employees, we need to go through the dates properly and we'll need to analyse the hours properly. One thing that I will mention down here at the bottom, as an employee, you can only get Jobkeeper from one source at a time. We have actually seen it, and believe it or not, the ATO has done audits where people are doubling up, and that's straight away time for a review. So be very, very careful in that regard. There's going to be a two-tier approach to Jobkeeper, as I suggested. So the whole idea here is they're trying to split full-time workers compared to part-time workers. Whereas in the past, basically all employees that were eligible or businesses on behalf of the employees received a flat $1,500. From Jobkeeper 2, workers will need to be classed as working greater than 20 hours plus per week or working less than that. Now, you can't just pick the period that it suits you or suits your team member. There's what's referred to as a reference period, okay? And that reference period is the bit that we will need to analyse. Now, quite simply, and we will, actually I'll cover it in the next slide, but it's very important that we look at those reference periods for each of your team members. So let's have a look at how that works. Any team member that was with you on the 1st of March, the reference period is the 28 days before the 1st of March. So that'll basically be February, okay? Now, in February, there are obviously approximately 4 weeks or 4 pay periods according to the ATO. Did the employee that you're looking at work more than 20 hours on average or more during that February period? If the answer to that is yes, then ultimately they will fall into a, let's call it a full-time employee, where they'll receive $1,200 under extension period 1. Now, any employee that commenced later than the 1st of March, but before the latest date of the 1st of July, the reference period will be the 28 days before, so basically June. And again, that's where you will determine the hours. So during any of those reference period, if an employee only worked 10 hours on average per week, then they will fall in to the 750 under extension period 1. So they will be known as a part-time employee. You as an employer cannot pick or choose your reference period to suit you or your employees. That's something that we're going to need to analyse. How do we do that? Through pay records. Remember, each of you, many of you I should say, are on simple touch payroll, which is basically means that we're lodging data, or you are doing it, every single pay period with the ATO. So the ATO already have this data. So if you try and argue that it's anything different, probably that's going to ring alarm bells for audit purposes. So we need to be very, very careful in that regard. Turnover test. So this is the other big turnover test, or the big rules that have changed. So the turnover tests were based upon projected. Now they are going to be based upon actual. And how do we determine what the actual is? So basically, for those of you that are registered for GST, each quarter or each month, you lodge a BAS. that BAS is either lodged under cash or accrual basis. Whatever your accounting basis for lodging that BAS is the accounting system that we must use to determine your eligibility. There is no modification to change that. That's in simple terms how it will work. Again, the ATO, and I'll cover some examples in a moment, but the ATO already have all your historical data. So we need to ensure that we're being very careful. There is no projected income tests as the first Jobkeeper version. It's based upon actual GST reporting. Now, the other thing where the ATO or the government have made it a little bit tricky, some would even argue not too fair, some of you, for example, may have sold some capital assets or had some bad debts or discounts in the previous reporting. They will all be taken into account when they're assessing your eligibility. So if someone, for example, sold some of their business in September last year and that increased their GST reporting, even though they've suffered a reduction of more than 30%, that might make you ineligible. So we need to have a look at your BAS from the previous year and compare it to what it's going to be this year. Basically, that's how it will all work. So let's have a look at some realistic comparison periods. So this is what we refer to as the basic test. Most of you out there are going to be under the basic test. The reason why you wouldn't be under the basic test, and we'll cover the alternate test shortly, is simply because maybe your business just started 6 months ago, or maybe the comparison period is not fair and equitable. But for extension period 1, which will cover pretty much October, November, December this year, if you're eligible, we need to prepare your September 2020 BAS. And that will simply be compared to your September 19 BAS. Have the numbers dropped by more than 30% because of COVID related? If the short answer is yes, you'll probably find that you're eligible to receive the extension period 1 under Jobkeeper. And similar to extension period 2, they will compare the December 20 BAS to the December 19 BAS. And again, the same rules apply. If there's more than a 30% reduction, then you will be applicable. So that's simply how most of you are going to be assessed. For those of you that we complete BASs on your behalf, then it's very important that we do them as soon as practically possible. And of course, like always, as accurately as possible. And that will go a long way towards answering your questions around eligibility. Okay. Then there's what we refer to as alternate tests. So like I said, most of the people that will fall under this umbrella will be for newly formed businesses, perhaps changes in structures to businesses. And as you can see, those that have irregular turnover, or maybe the natural disaster like the fires, etc., that ripped through over the last 12 months went through. So again, we'll need to look at each one to see if anyone has an alternate test, but they do get a hell of a lot more complicated. And it's not as easy as black and white compared to the basic test. Now, one thing that I will mention, because we do get this question asked, if you do not satisfy the basic test, but that's the test that you may need to use, you cannot then just go and pick an alternate test and say, fantastic, I qualify under this. It's a basic test, and if you qualify, yes or no, you can't then pick and choose which test you fall under to give you the best result. The ATO are going to be very strong on that. Declining turnover. So we'll talk about what does the 30% reduction look like. And there's two different rules, if you like. One for all of you that are registered for GST, but there's some out there that are not registered for GST, which we'll also have a look at. So for those of you that are registered for GST, like I said, you must use or measure your BASs, so the GST reporting system. So for those of you that report and pay GST on a cash basis, so when you receive money and when you pay the bills, then that's what you will use to determine your current GST turnover for the purpose of Jobkeeper 2.0. We cannot use cash basis for one and accrual for the other and say that we satisfy, or vice versa. You can't use accrual accounting if you lodge your BAS on a cash basis. You must follow your GST reporting system. Okay, so quite simply, that's why I've put a note there. Your current GST turnover is based on actual sales that have been made, rather than an estimate or prediction, as was the case in Jobkeeper 1. So actual sales, very important. Now the government have been very smart that that's going to knock a few of you out. Because in the past we could predict or estimate. Yes, it still had to be based upon relevant data and appropriate numbers, etc. But very, very important. Just a quick note down below, GST turnover. What does it include? Yes, it includes your everyday sales or cash receipts, but it also, the government, have included the sale of capital assets. For example, if your business sold a motor vehicle for $20,000, perhaps 12 months ago, that was included and will be included when comparing it to this year. Somewhat unfair, but that's the way that the ATO legislation has been created. Jobkeeper receipts thus far, or ATO cash flow boost payments, will not be included for determining what your current turnover is. So that's a positive. For those of you that are not registered for GST, the rules are a little bit simpler, or you do have some choice. You as an entity can choose whether your GST turnover is looked at as a cash or on an accrual basis. We must be consistent, yes, but at least we will have the ability to look at both and help or hopefully satisfy one of them. Where you are registered for GST, we do not have that choice. So they've knocked that on the head straight away. Jobkeeper tip. Until your BASs are done for these respective periods, it's pretty hard to determine whether you actually meet the Jobkeeper eligibility for version 2. As a result, get your BASs done ASAP. If you do them yourself, then we need to get them done very quickly. If we do them, please provide us and let us know with the appropriate details as soon as you can, because during the month of October, there's going to be a lot of clients asking us, Peter, team, am I eligible to receive it? We've already had these emails and phone calls starting. So we've got a lot on our plate to hopefully try and help you all, but the earlier you can get organised, the better it will be. Also be careful for those of you that your tax returns are late, or perhaps you owe money to the ATO. because that could impact your eligibility or a delay in payments coming your way. The ATO over the past 6 months have basically somewhat not chased people, or certainly not followed up like they've once done. That's just started to happen again. And certainly their lack of follow-up, it will not last forever. So those of you that are behind with whatever, we need to get you up to date. Talk to us, work with us to do that. Very important. It could affect your JobKeeper eligibility. Okay, so let's just have a look at like I said, the ATO are gonna try for us tax agents, so thank God, but I'm not sure if I believe them at this point, but they're gonna try and make this whole process as easy as possible, because they certainly didn't do that with JobKeeper version 1. As you can see here on the screen, there's a report that the ATO are going to provide us. Like I said, this morning, I noticed there were some glitches in this report. But for all of you entities out there, or businesses, or even sole traders, etc., that are already registered for JobKeeper, then this is basically a sample of what the ATO will provide to us or you after the monthly declaration for September is lodged. So right here and now, I know this morning many clients have already forwarded their monthly details to us. We will lodge that monthly declaration on your behalf, the monthly numbers. Once that's done, then we can proceed for the eligibility process. The ATO are telling us that they're going to make it as easy as possible by having all your employees listed. We need to basically use and pick which tier or category they fall into. They'll even try and make it very easy, saying this is what you did in September last year, because that's what you've lodged with the ATO. So therefore, what does your 2020 numbers look like? So they have told us that it's going to be as simple as possible. Like I said, to me, simple and the ATO is not in the same dictionary, so time will tell in that regard. When will payments, if you're eligible for JobKeeper version 2, arrive? They'll be basically a month in arrears. So as you can see there, for October, they'll arrive in early November. November, early December, and obviously the list goes on. So no different to now, how you're all going to be getting your October payments over the coming week or two. They basically relate to September, so nothing has changed there. One thing, monthly declarations, generally we have 14 days to lodge. That will not change moving forward. So that's a little bit about the JobKeeper version 2. Obviously I'm wary of time, so we'll keep ticking along. There is a new thing introduced by the federal government as well, where they've amended the Fair Work Act, and I thought I would mention it to many of you out there. Basically, some of you are not going to be eligible for JobKeeper version 2, whether it's for extension period 1 or 2, okay? You will be qualified, or you will be put into a bucket called a legacy employer. And that simply means that you qualified for version 1, but you do not qualify for version 2. Now, the government has tried to assist by relaxing some of the fair work rules out there. It's designed to give you flexibility as a business owner around what employees do and how much they do and when they do it. So if you are still experiencing a 10% decline in turnover or more, but you just haven't got a 30% decline, then this legislation does apply to you. What does it mean? It means you will have flexibility as an employer. You can change the days and the times of work as you see fit. You can change the duties or perhaps the location that your team members work at. You can even have stand down directions to reduce their ordinary hours down if required to help your business and help with cash flow. The one thing I would say, be very, very careful that it doesn't come back to bite you. I would be seeking out HR professional advice if this is something that you're considering or you're thinking of doing. Number one, you don't want to do the wrong thing, but number two, you need to make sure that you don't end up with some form of legal action as well. But I thought I would mention it because that's something that some of you may be considering or didn't know that was out there. Double up. This is a little bit of a tip out there. So where we have Jobkeeper and we also have a Centrelink thing called Jobseeker. So basically, those on Jobkeeper may possibly be able to claim a double up or a little bit of an extra by utilising Jobseeker as well through Centrelink. This will only happen from this Monday onwards. So basically not for the old Jobkeeper version 1, it's more under Jobkeeper 2, simply because the amounts, which we'll cover in a moment, have changed, okay? The federal government's confirmed this, and they certainly have agreed that if someone's on Jobkeeper, they do not want to exclude people getting a top up on Jobseeker, which is probably pretty generous of them when you think about it. It's targeted to help people, obviously, with different individual circumstances. Let's have a look at it in a bit more depth. So from the 27th of September, the Jobkeeper will drop to $7.50 per fortnight for those that are part-time or under 20 hours per week on average. The Jobkeeper rate will then be less than the new job rate or job seeker rate, which will currently be at $8.15 per fortnight. And as a result of that, you may be able to do a little bit of a double up because they've also relaxed the rules where an employment separation certificate's not required for Jobkeeper job seeker payments as well. So in simple terms, if you're receiving the part-time rate of Jobkeeper at $7.50 from your employment, you may be able to get a further top-up of another $545 from Jobseeker from Centrelink, giving you a total of almost $1,300 per fortnight. Certainly a hell of a lot better than the $7.50. Yes, we'll need to check with all this, but it can be possible. And this has been confirmed also by the ATO and Centrelink and the various accounting bodies out there like CPA, etc. Little bit of a tip as well. For those of you that are receiving Jobseeker, so the Centrelink payment, and have children, will also automatically be eligible for the full rate of family tax benefit through Centrelink. So again, that could be another top up to look at. And possibility rent assistance if that applies to you. So there are some opportunities here where we can basically take advantage of some different systems under Jobkeeper version 2 that we couldn't necessarily do under Jobkeeper 1. So very, very important in that regard to have that in the back of your mind at least. We can talk further about that. Now, I've tried to make today as simple as possible, but what we will do once this presentation's finished, and I'm wary of time, we've got about 15 or so minutes to go, we will be sending out this PDF version here, which you can all see on your screen, which goes through everything that we've spoken about. So at least that way it's a little bit of a handout or a bit of a brochure which puts it all under, hopefully explains all the slides, etc. Of course, if any of you have any questions, we're more than happy to help. But in simple terms, if you look at the middle bit, currently, those that were receiving Jobkeeper, it was $1,500 per fortnight. For those of you that are going to be classed as full-time workers and your employer is still eligible, it will drop to $1,200 for the next 3 months. And then if still eligible thereafter, the next 3 months, it will drop to $1,000. For those of you on a part-time basis, you're going to drop from $1,500 to $750, and then after another 3 months, it'll drop to $650. So they're the important numbers and will help you with your cash flow, etc. Obviously, the idea is the government doesn't want to pay this, and it all probably depends upon lockdown here in Victoria and how quickly we open up, because that'll determine how successful or how much a business's revenue is actually down. That's the key. Frequently asked questions. So I already, or every day, I know myself and I know the team get many questions that are getting fired to us in different mechanisms. I thought it'd be good to ensure that let's go through some of the more common questions, which hopefully will clarify everything that we've spoken about. So when does the new Jobkeeper commence? It was from Monday, the 28th of September. How long will it be in place for? Basically 6 months. But as we did explain, it'll be broken down into 2 extension periods, and they will each last 3 months. So quarter by quarter. Does a business need to reapply with the ATO for Jobkeeper purposes? The short answer is no, but eligibility must be met. So just because you don't need to reapply doesn't mean you don't have to meet the eligibility rules. I know what we do here at Chan and Naylor is we create work papers. We make sure we've got a record of why you qualify, how you're eligible. It's not a 3-minute job to do that at most occasions. It means, yes, that we need to do some work, but at least if the ATO asks questions or try and examine your eligibility, we have the appropriate papers on our file to show them how and why. Very important. Will my business still have to complete monthly declarations? Yes. Quite simply, if you don't, you will not receive the payment. How will I know if my entity or business is eligible? Like I said, the ATO is going to be providing us with a report. Or for those of you that have done your own registrations and your own work each month, they will be providing yourself with a report. That's under the basic test rules. We need to compare simply 2020 quarter for September to 19 quarter. There'll be some adjustments and some little things that will possibly change it, but that's going to be in general how it works. Remember, there's alternate tests as well for those of you with different circumstances. So we can look at that for you in further depth. How much will I get for the new Jobkeeper rates? Extension period 1 will either be $1,200 for full-timers or $750 for part-timers, or extension period 2, it will then drop further. So $1,000 versus the $650 mark. What is the difference between a full-time versus part-time employee? Look at the reference period. Full-time will equal 20 hours or more per week during that reference period. Part-time, it'll basically be everyone else. One common question that we have had, what happens if a business hasn't dropped by 30% in July to September quarter? So right now, but for the October to December quarter, their income or their GST turnover will drop by more than 30%. Would it become eligible and would it be backdated? So quite simply, if a business does not qualify for Jobkeeper 2 extension period 1, that will not knock it out for extension period 2. So you may have some businesses that will qualify for the second 3 months rather than the first. Again, we are going to need to test the eligibility at that point to ensure whether you do or do not qualify. Remember, here in Victoria, we got somewhat back on track during June and July this year, even leading into early August. And then that's when our stage 4 lockdown with curfews and everything else happened. So some businesses actually did okay during July. And maybe they even restructured their businesses to ensure that they had plenty of income coming through. But it's more or less been the last 6 to 8 weeks where, for example, retail has been shut down. So therefore, you may have a business, because they had a ripper of July, that doesn't qualify for this first extension period. But then if we're still in lockdown for a while yet, let's say retail, and the shops don't open, it might be October and November, then they may actually qualify for extension period 2. So this is where each business will be different and it'll need to be analysed. So that's a bit about the Jobkeeper version 2. Just quickly, like I said, I want to finish on time because I thank you for taking this hour out of your lunch to listen in. Couple of tips from our side as accountants and your tax professionals. What can you do next to help your situation? Banks, it's time, if you're not already, to keep them honest. The banks at the moment are very, very hungry and they're looking for the right type of client. If your loan, whether it be a private residential, maybe an investment property, if it doesn't start with a 2, you should be asking questions because that's what the rates are at the moment. I'm not sure if they can drop too much further. But we still commonly see some people and clients of ours with 3, 4, 5% that they're paying interest rates for. If your loan doesn't start with a 2, you should be seeking out the banks. We have Lucy in the office with her contact details there. Feel free to give us a call. It's a free service to you, but ultimately we can help you and certainly look at your refinancing requirements or saving you some cash flow. The banks get enough and make enough. Do what you've got to do to keep it in your pocket. Also, wealth and financial planning. No time like the present, the old saying, cash is king, is more important. None of us could have predicted what we've gone through in the last 6 months, or probably more importantly, what's going to happen for the rest of this year and what does 2021 look like. However, cash is king. There are many people that have lost jobs, they've deferred their mortgages or their car repayments, they can't pay some of their bills. Jobkeeper could be possibly stopping if it hasn't already. So you need to get everything looked at. What effect has COVID had on your current superannuation policies? Perhaps on your insurances and investments. Again, if we can help, contact Daz in the office and he'll certainly at least have a chat to you about your particular situation. Like I said, we've shifted to a lot of technology and to help you as our clients and to ensure that we're still doing our utmost to service you guys. If you haven't already, jump onto our brand new website and certainly have a look. There's plenty of fact sheets, tax checklists, A lot of things on there which could assist. Under the resources tab, I will bring to your attention, we've created what we refer to as an occupation guide. So whether you're a truck or a bus driver or a cleaner or teachers or the police, there's even one there at the moment for public servants. Not sure if they deserve it because they've got amnesia, obviously, but ultimately you can download an occupation guide and that will tell you what we believe as professionals you can claim on your tax return. It might just give you that little bit of a boost that you need. So feel free to do that as well. Webinars, so hopefully today you saw some value of jumping on. One thing that I will mention, next Tuesday night, we have an upcoming federal budget happening, so up at Canberra. Normally that is held in May every year. However, because of COVID, it was pushed back roughly 6 months. That is happening next Tuesday night. There are going to be, and from what we've heard on the inside, some major changes coming. You know, there's talks about tax cuts. There's talks about businesses that they're going to be provided with incentives to hire new team members, possibly keep team members. There's possible changes with payroll tax, FBT that they're talking about. And of course, the old chestnut around how will superannuation be affected. So again, we're going to be running some webinars next week. As you can see there, next Thursday at lunchtime and Friday afternoon is the dates that we've scheduled in. And tomorrow morning, you will all receive an invitation, just like you did for this webinar, if you would like to join us at that point. Would love to have you all there again. One question that I will raise before we wrap up, is your business okay? So for those of you that are running businesses, you need to understand or be looking at, how's your cash flow? Do you need to be doing some forecasting or budgeting? Looking at the team members versus the revenue. What are the stimulus packages that may be available to you? Talk to your banks, talk to your landlords, trim the fat, as I like to call it, very important. Speak to us now, whether we can help at all, okay? I can't stress that anymore. Know your numbers. It's something that I regularly talk about to our clients and even to the team. What do your numbers look like for your business? Basically, if you don't know your numbers, how can your business operate and improve those numbers if you're not sure what they are? We can utilize software such as Xero, which goes a long way towards assisting many of our clients, but it goes a long way towards telling you what your daily numbers are. You need to look at all this stuff. COVID hopefully will change the way that we all do business and certainly the way that we understand how our business works. Our focus, it's all about educating you guys as our clients. We'll continue to send newsletters, have webinars, marketing materials. Once we can open up, probably next year now, we'll look at doing seminars. Obviously, consultations, whether they be through Zoom or face-to-face in the old traditional way. Your focus should be all about investing in yourselves. Read books, read things off social media, speak to the right people. Fantastic, attend seminars and webinars where you believe it can educate you. Find opportunities out there. Very, very important if we learn anything out of this COVID situation. So just quickly, it looks like I've hit it right on the head with 1:30. I'd just like to take this opportunity to say thank you for joining in on behalf of myself as the managing partner, but also on behalf of the team. You allowing us to work with you and allowing us to educate you goes a long way towards ticking all the right boxes. Jobkeeper, if you can get it, go for it. If you're not sure, talk to us for assistance. Make sure all your compliance is up to date. We're going to be contacting many of you in the coming weeks that it's not. And that'll cover tax returns, BASs, super, payments, etc. It's time to get yourself financially sorted right now. So thank you for joining us. We will send out PDF and I'll try and do my best to answer any questions off the back of that as well. If you need to contact us, there's our respective details. Many of you also know many of the team members. I'm happy for you to contact them as well. But thank you. Please, please look after yourselves. We're getting through all this mess together. I hope you don't have too much cabin fever, and like us all, I hope we can get out there, enjoy the summer, and hopefully have a COVID normal Christmas as far as that can be. But thank you, take care, and God bless you all. Cheers. Bye-bye.